All right, third, third, third time trying to do this video. Not financial advice, just for entertainment. Don't blame me for any of your choices. Don't follow my trades. You get it. Be responsible. A few days ago, I made this video talking about how I wanted to possibly buy a call for Celsius. I had a few shares at the time, but I thought for earnings, I could play the earnings, and I was kind of a wuss. I, Options are dangerous. I don't really and I don't like losing money. So I bought an $80 call expiring March 1st. If I was much more, if I was smarter about it, I would have bought a $60 call in the money because it was trading around like 63, 64 at the time. Or I could have bought like a 65 closer to the money. But I didn't want to take on that risk. And to subsidize the call, I sold off a few of my Celsius shares that had made some money. I only have like 2 or 3 shares left. I mean, it's all risky, so I don't like to I don't like to risk a lot on super risky things because I'm trying to build passive income. So the video today is an update, but it's also a discussion of in my case, poor profit management. I thought I did a good job of the NVIDIA, managing NVIDIA's when I, traded that and tripled my money and stuff like that, um, with a far out of the money call. But this morning, Celsius took off and I was up, 60 bucks almost because, this isn't perfect information because this goes by 5 minute blocks. And I could have sold and I didn't. I was just like, no, I had that gambler's mentality that no, it's gonna keep going because Celsius reports earnings in a couple of days. So I thought, oh, it's gonna keep going. And clearly I kind of messed up a bit. So right now, I am $2 down on my option. I bought it for $70. It's currently worth 68. And time is not my friend right now because this is going to expire in 4 days on Friday, and I have no desire to hold on to this before earnings unless it's totally like lost all its value. Um, just gamble at that point. Um, But this is it. This is the mistake here. I did look. I was thinking about I could roll it because I've done it in the past with my other trades. Roll it up, right? I found out that Celsius did introduce some higher calls, so there's like an $86 call. I could have rolled it up. I could have de-risked. I could have been in the trade for only like, you know, there are things I could have done. I did none of them. I kind of said, it'll be fine. So it's all on me if this trade goes bad because I had profit and I didn't take it. So I'm just pointing that out. Like it was the greed, right? I could have, okay, I'm not going to beat a dead horse. You get the point here. But I want to point out this weird event that took place though today on Celsius. I mean, look, I'm not an expert on the Greeks. Like I don't know every aspect. I couldn't write a paper, right? I couldn't be like, here's the technical reasons why, I can't do that. I have an okay understanding of them, okay? So, but I wanted to point out the following, which is, for an example, the Celsius $50 March 1st put. Big bid-ask spread at the end of the day. Ignore that for now. The previous close, this was last Friday. It closed at $17. Okay. Um, but today at the high, it was worth $20. This put. The whole day, this stock uh, was rallying up. Oh, let me show you. This isn't perfect because the 1 day chart actually isn't showing the information, so I had to go to the 1 week. But at no point, though, today did Celsius drop below the price from last Friday. Okay, so this here, the 26th, that would have been pre-market because it wasn't there. But when options opened, you saw in the other chart. Hold on, I'll go back to that. So look at this. this was the Celsius $50 put today. And if you could recall the other chart showing my call, how it was rocketing up, right, around the same time, this put was on fire also. But that doesn't really make sense initially, right? Because the stock was up the whole day. It was higher than the close last Friday. And with theta and the weekend, the option should have lost value because of the time issue alone, right? Each day that passes, especially if there's only 5 days left, or no, now 4 days left for this option to be worth anything. So you automatically lost a few dollars or a couple dollars because the time passes. But yet, this thing rocketed up to here this morning. People who were who thought they should have been losing money on their puts this morning as the stock was on fire actually made money. And if they were smart, they would have got out of it right around this time. Smarter than me. And the reason for that is because it had to be that the implied volatility expanded, right? That the volatility had gotten bigger, okay? Because the stock was up a couple of dollars over last Friday, and yet somehow my call was up 75%. A $2 move on a $64 stock is like 3%. Yet my stock, my option went up like 75% or 50% or whatever, right? And that's because just the volatility got nuts. Um, and I was just greedy. Same thing here with the put. Makes no sense why the put should have gone up in value considering the stock was going up, but it's because of the IV expansion here that took place, or at least that's my theory behind it. So I'm only putting this out so people understand how options kind of work, because the flip side of this is when you have IV crush and the volatility just gets reduced in a huge way, and you see people losing their ass because the option has no value anymore because there's no more volatility left in it, no more implied volatility. So anyway, hope that makes sense. If it doesn't, it didn't make sense to me when I first started out either. It's just a matter of taking some time and observing, learning, losing money, etc., to figure out how it kind of works. But I regret not selling it. But at the same time, I have this gambler's itch. I think Celsius is going to do well, and hopefully it'll run up a couple more days before earnings. Anyway, um, that's it. Hope it helps. Remember, just for entertainment, not financial advice.